Hey, welcome everybody. This is John Paul Madochi, Dr. Speed Selling. This is the Raging Verbalist number 127. If you've never been to Raging Verbalist before, welcome. If you're an old hat, glad you're back. Make sure you hit the subscribe, the like, the notifications, all the YouTube nonsense. Also, you can catch us on the Facebook page, which is Position to Win Book, which of course is my group. You can also add questions there. And as always, we have the ever lovely Sandra. Sandra is here to ask the questions that would be your mind, or we think would be in your mind. And Sandra, welcome.
Hello, how are you doing today?
Well, what could be better? I mean, we're got another Raging Verbalist, and the stock market is going down and crazy. So today will be an interesting day. So what do we have on our topic today? Because we're talking about what financial IQ. So
Yes,
I think we're down
IQ.
I think we're down a few points today. Okay.
Correct. All right, so to start it off, what is the difference between IQ, EQ, and FQ?
Well, IQ is intelligence quotient. And by the way, if you ever run into somebody who says, I don't believe in IQ points, I don't believe in the testing, it usually means they didn't do well on the test, in my experience. EQ, for those of you who don't know, is an emotional quotient. I mean, how stable are you or aren't you? And in this world, as we look out at the amount of crazy going on, we probably see a deterioration in emotional quotient, because it's really how to handle things. But today we're going to talk about FQ, and FQ is your financial quotient. What is your financial IQ? How smart are you about financing? How smart are you about what goes on in this world? I hear so many, and I guess because of, if we want to be woke, they're not old wives' tales. They're old tales that are with ovary beings. That, I mean, I don't know. Anyway, but there's lots of that. So the difference is that financial IQ is all about knowing about the money. What is the money situation? And I have to say that it's probably like 95% of the population is not in good shape as far as knowing about how money works.
All right, so is it possible to raise your financial IQ?
Well, I think it is very possible. That the challenge, though, is that you'll end up getting so much conflicting information. If you go and you start plugging this stuff into Google, I always like to think of Google as this big giant ocean that's broad and wide and about 6 inches deep, because usually it's just simple answers to complex problems that aren't right. So you can raise your financial IQ. The question is what what are you going to focus on? What are you going to do? The whole Robin Hood, and if you don't know who those guys are, and they're not even a sponsored, dadgummit. But the Robin Hood folks and Reddit, where people were going to go out there and make a bunch of money on meme stocks and do all of that. To me, that was a kind of a blip in time. Will that continue on? Well, I don't know. It doesn't look like it's going to continue. But what it really is all about is the fact that you have all of these people who are walking into a stock, and saying, hey, we're going to buy it. We're going to drive it up to the moon. I had somebody who had made an extraordinary amount of money on GameStop. And actually a mutual friend of ours called me up and said, can you talk him into selling some of this? Because this guy was just at the big giant, hookah, inhaling the vapes and going crazy over it. And I said, look, sell a bunch of it. You might be sad because you missed out, but sell a bunch of it. And he did. And he made a bunch of money. So that was good. So is it possible? Yes, but you need to look carefully at what you're going to learn about. And by the way, no matter who you learn from, understand they have their own bias, they have their own views, they have their own sense, me included, about what you should or shouldn't do. And it should be based upon what you want to do and what you want to accomplish. That's the biggest key about your financial IQ, but also knowing how numbers work. If you don't know how numbers work, how are you going to make this thing, how are you going to change what's going on in your life?
All right, so why is there such a disparity in financial knowledge?
Well, they're saying that money is the root of all evil is really a misnomer. we have a society that has a whole negativity about money in one side, and on the other side we worship at watching people who have crazy money. They went out and spent all this dough, or they went out and did crazy stuff. So I think there's a financial disparity, or there's a disparity in financial knowledge, because it's not something that gets taught, and if it is taught, it's taught very poorly. And what happens is that you have all these people who get only part of it. Also, the fact that this is where, and this is, I was sitting in a client's conference room with his people, and the meeting breaks up, and as often happens, there are lingerers and hanger-oners and all that. I'm sitting there next to their operating manager. I mean, and he's making sure things get shipped, things get done. He's doing all that. And he sits there and we start talking, and he turns out to be a person who's very interested, and he and his wife homeschool their children, and he had a bunch of children. And he said, I really don't understand why there's such this emphasis on math. Well, I can tell you that math is really important. You will be really lousy at finances and financial. Now, this isn't just the accounting side, but also the analysis and understanding how to look at things properly. But if you don't understand how to make finances work through the math side, you are going to be in serious, serious trouble. So my suggestion, or my observation is that the more difficulty you had with math, the more likely it is that you will make really bad financial decisions and won't be able to understand what's going on. So I think there's this huge disparity, this huge distance, because most people don't know how to do simple things with it. And we'll talk more about that in a little bit, but I think that's the biggest thing. And since it is not brought up in any coherent fashion and taught to people from a young age, not to dive off into politics, but we're trying to talk to 5-year-olds about their gender identity, and yet we're not talking to 5-year-olds about, hey, let's talk about money management. Teach them how to manage money, and they can be whatever gender they want to be. I'm just telling you that people don't understand finances much at all.
So what are some of the tools to help improve your financial IQ?
The biggest one, the best one, the one that people apparently think is passe or old school or not something that they need to even think about, is something as simple as a calculator. We live in a time where for less than $100, you can buy a financial calculator and have more power than all of just those who are in the Hall of Fame of finance, people like Benjamin Graham, people like Jesse Livermore, people who are out, did not, Michael Milken even, didn't have at their fingertips. You can buy $100 calculator. In fact, a lot of people are talking about, well, do we ever even need one? Because I have a computer. You should always have with you, if you're in any business meeting, a calculator. Why? Because you should do the numbers, do the math. Every computer has built-in calculators. When I walk up to somebody, and especially if I'm walking through a client's offices, and I look at the apps they have open and the hidden apps, the ones they shouldn't have open, solitaire, and the pictures that they shouldn't be looking at while they're at work, and and then their Facebook feed, because of course, or their TikTok or whatever. But what I've yet to find is a lot of people having the calculator app open. So that's one tool that you can learn how to use. And if you do, you'll learn a lot about how finances work and how money works. And that's one tool. The fact that everyone, if you have a computer, if you don't have a computer, well, maybe you're watching this on a smart TV or something. But if you have a computer, you should use a spreadsheet and learn how a spreadsheet works. Now, here's the reality. If you don't want to give, Bill Gates and his group money for Excel, go get something like LibreOffice. And no, they aren't paying me to say it, but I use LibreOffice because it is a free open source set. Donate to these guys who are banging away at this thing. Works very well. And the point of it is that you should learn how to build financial modeling. If you're going to do anything with finance, those two things, a calculator and Excel spreadsheet, or a a spreadsheet program, make a radical difference. In fact, the very first and most expensive program I had ever purchased at the time was an early spreadsheet called VisiCalc. I had a computer that cost me about $2,500, and I have to tell you, I was squeaking, squeak, 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 because of how expensive it was to get what was called VisiCalc, and I bought that bad boy for $300. I mean, think about it. I mean, what is that, 12.5% or something of the total price of my computer? Got to have a spreadsheet. Got to go out and have that. So those two tools should help you a lot. And the other thing is that you should continuously go out there and learn. Now, one of the things that you can always do is to read. And of course, Warren Buffett says it better than anyone that I've ever heard, which is, invest in yourself to learn, and it will pay off huge dividends. I am paraphrasing. I have not sat on Warren's knee and had him tell me that, but I can tell you that one of the things that you should think about doing is going out and getting this book if you're in business or going to be in business or have a career that you're going to manage, which I think about covers everybody, unless you're sailing off into the sunset. And that is, most businesses fail in the first 5 minutes. It just takes them 3 to 5 years to realize it. And that is called Position to Win. And this book was written specifically because people make mistakes in the first 5 minutes. You may find that extraordinary. You may find that, hey, that's out of control. But I can tell you, having watched lots of businesses succeed and a lot more fail, that they made decisions early on, such as, getting into a business that has like bullshit margins. I mean, I know that's a technical expression, but you only have as much money as you have. If you're counting on what I call unicorn money, you are going to lose your shirt. And making a mistake in the first 5 minutes and then burning through all of your money, your friends and relatives' money, maybe you can go out and borrow money, angel money, you name it. And there's just a lot of that goes on. So go check out that book. And, it's not a financial book, but what it hopefully will do is let you analyze an opportunity before you dive in. And that's part of having a financial IQ points going up, which is that what you need to do is be able to see a situation clearly and without any fear that you're going, well, I think the numbers are kind of close.
All right. So what's your assessment of people's financial IQ?
I find that the average person that I run into, business person, salesperson, marketing person, internet marketing, you name it, they really don't like doing the tough work of nailing down what something it costs, how much it takes to do it. They have no idea what most of that stuff is. They're enthusiastically racing to the cliff, and they have no idea what's going on. And I'm going to tell you, if you're in that boat, it may, you may beat 3 to 5 years. You may go broke sooner than that. When you look at people who get into high turnover positions, people who go out and become real estate, brokers and salespeople, you'll find that in 3 years, 80-something% of them crash and burn. Why? Because their financial IQ sucks. They didn't do the numbers. They didn't figure out what they were going to do. I'll give you a couple of insights to that. One of which is that I go in and I'm doing this turnaround, and the guy tells me he's doing $5 million a year, which as soon as somebody tells me a nice, beautiful round number like that, it's usually not true. So I said, well, let's look at the books. Let's look at the numbers, which shocks him because he says, I thought you were the marketing, sales, advertising kind of guy, as if that was disconnected from knowing your numbers. It's not. Now, it's great to be creative, but it's also, you need to know what the numbers are. So he shows me the numbers, and the reality is that he's not a $5 million business. He's a $4 million business. Aspirationally wants to be 5 million. I aspirationally want to be, younger and thinner and, no gray hair. But that doesn't mean that that's going to happen. Let's not talk about aspiration. Let's talk about reality. And as we were sitting there talking, he says, well, it's going to be a piece of cake, his words, to go from 4 million to 5 million. I've got that in the bag. And I said, great, show me your trend line, show me your numbers. And the more I look at it, it looks like it's going to be hard for him to maintain the 4 million, let alone grow beyond that. The reality of it is that he didn't know how this tied in. And what he was doing is he was doing what most people do, which is they are flailing around and not becoming more successful. By the way, we ended up not doing business together. As far as I know, he did not meet his aspirational goal and did not go to where he wanted to go. So my assessment is that most people really suck at it, because if I ask them one question, which they should know, and here's a bonus for everybody out there. Here's the question that I used to ask. I don't ask it anymore because I got no good answers, which is, how much does it cost you to acquire a single customer? What is that number? Now you may say, John, there's, that's hard because there's a lot of variables. Take the total. Here, I'll give you the formula right now. Here you go. It's called an algorithm. Here you go. You take the total amount of money that you spend on advertising, marketing, and sales, and you take that number and then you divide it by the number of customers that you acquired for that period. And that resulting number, it's called division, is the number of what it costs you to get a customer. And I used to ask that a lot, and I don't anymore because no one actually accurately knows it. Walked into one situation, the guy said it cost us $416 to get a customer. It cost us $200 to get a customer. I did the analysis. It cost them $416, which meant that their $500 offering was losing money when you counted in other overhead, because customer acquisition costs do not include fulfillment costs. Okay, Sandra, next.
All right. So what is the difference between what they perceive it is and what it actually is?
If you perceive that your costs of acquisition are $200 versus the reality of $416, you will be off by over 100%. And because of that, you in fact will make lots of bad decisions, and you will in fact make less money than you should be making. The mistake that people make is that they are always and forever fighting to try to make this business work, whatever business they're in. And I'm going to suggest to you that you cannot and should not ever be in a position where you are not aware of what those things are. So the difference between their perception is that they're making progress. They want to have positive feedback no matter what. And the mistake that they have is that they do not know what they do not know. And therefore, they are invariably out there creating a chaos that is just terrible. So their perception is they're good at it. The reality is they suck at it.
All right. So what are some concrete steps to take to improve your financial IQ?
Most important thing you can do is to go back and find out if you are math deficient. And if you are math deficient, go find out where you fell in the hole. Here is what happens to all of us. We are in school. We are little brains full of mush, as they say, and we're learning these topics. And math is one of those things that it builds on past lessons. Somewhere in there, you had a disconnect. I believe that just about anyone can learn how to become better at math if, in fact, they'll go back and find out where they fell in the hole. Wherever you fell in the hole, addition, subtraction, the simple stuff, and then learn how to do that. Now, you may say, because you are very ego driven, that I don't really want to do that, or I leave that to the accountants, or I leave that to somebody else. Great, as long as you know how to interpret the numbers. Learning how to work with the numbers is to go back. Concrete step is to find out where you fell, do an assessment, and then start working from there and improving that. Have yet to find somebody who didn't improve because of that. That's concrete step number one. Concrete step number two is go out and buy yourself a calculator. I suggest a financial calculator. Again, this is all about finances. They sell a lot more scientific calculators than they do financial ones. I am a big fan of Hewlett Packard. I have a 17B. For those who want to know a model number, no, HP doesn't give me any money. Less than $100. It's an amazing piece of equipment, and go out and learn how to do a variety of financial things with that. That's number two. And number three is start to learn how to define problems. And this is where most people really fell off the cliff, because they ended up getting a word problem thrown at them. I'm going to tell you right now, here's the bad news. The bad news is that most business finance issues are word problems. A train leaves Chicago doing 32 miles an hour. Another train leaves it's those type of word problems. Well, business are those types of word problems. So you have to learn how to sift and sort and separate and find the numbers, lay out the numbers, and write them out. So those are the three concrete steps to improve your financial IQ.
So given the current financial atmosphere, why is it important that everyone raise their financial IQ?
I am always amazed to walk through a casino in Las Vegas and meet people who supposedly should know better, who are playing some of the dumbest things you could ever imagine they would play. And they're doing it because they do not understand the odds and percentages against them. Now, it's one thing to say, well, it's entertainment and it's fun and we get a free buffet and all that's fine. But what I can tell you is that from a financial IQ standpoint, what you have to do is you have to think about how to learn how to do this better. The stock market, in some ways, could be viewed as a big giant casino. People who are buying meme stocks with knowing nothing about it other than some fanciful story about how these guys are going to, the guy who was involved in GameStop. We're going to, John, I'm involved with a bunch of people who are going to screw the hedge fund players over. Well, they did for a little bit. Some hedge funds lost a lot of money betting against the meme stocks. But what they did is that the hedge fund people have better information and they're smarter and they saw what people were doing and they started using that to their advantage. So what you have to we have to know is that since we live in currently, inflation's on the run, in the bad way, stock market's doing crazy volatility and fluctuation, scaring people. If you look at your retirement account and you see all those, all that red ink, we have been living in kind of this wonderful time where we had low interest rates, stock market going up, everything was, inflation was low. Well, now that when that gets flipped, what happens is that a couple things take place. And this is why you want to raise your financial IQ. People hunker in the bunker and don't do anything. When the market crashed because of the pandemic, I was trying to buy things that I thought would go up. Did things improve quite a bit? It is gut-wrenching to watch, your portfolio go through the floor. If you don't have a portfolio, you can start having a portfolio because it is the cheapest time in the history of humankind to invest. No, I'm not giving you advice about investing. I'm just saying that the accessibility is there. But what I am going to tell you is that people usually do not pay heed. They learn this and they say it, and it's a cool thing to say, which is to buy low and sell high. The opposite, in fact, takes place. Most people buy high and sell low and lose their shirt consistently. So what I'm going to say is that given the turmoil that we have and how hectic things are, raising your financial IQ will help you pick those winners that are going to be winners in the future and help you weather this storm and not be part of the negative crowd. Hey, I'm not happy and dancing because of these things happening. I'm just saying, how do you make money in those situations? And doing that will, in fact, be a positive for you and your family.
So Is it important to raise your financial IQ if you're going to be successful in today's world?
There's lots of demarcation points in this world, and this is the sad truth, which most people do not want to live up to. If you cannot, and this is, for many of you, you may say, John, this is ridiculous, but this is where we start. If you are illiterate and can't read, by the way, that is a charity area that my wife and I spend time and money in, then you're at a decided disadvantage because the world isn't open to you. You have to do it other ways. But once you have that level of literacy, then the question is, do you have math literacy? And sadly, that's the unspoken, that's the hidden one, because, well, do you need it or you don't need it? Well, I would say it's absolutely essential that you do. As we move forward in life, every person out there, you should think about how you could become somewhat of a financial analyst. I'm not saying you're going to be so good that they're going to call you up from a big Wall Street firm and say, come on down. We found out about you. You really know how to sling those numbers. And what did we ever do without you? But what I am going to say is the more that you know how to analyze these things, the more you know how to take them apart and put them back together, the more confidence you have, and the less likely it will be that you'll be taken advantage of. Whenever people get into these kind of swirling vortexes of problems, there's lots of people who will take advantage of you, and you become an easy prey because you don't know which way is up. So my belief is, in tumultuous times, given the turmoil, given the volatility, the more that you can raise your financial IQ, the more that you will bolster your position and be in a position where you can go and take advantage of things that could, in fact, dramatically improve and change your life. My hope is that today we've opened up the door a little bit and you start thinking in terms of, what is my financial IQ? What are the gaps that I have in my education? How do I start to fill them? And more importantly, how do I participate in this amazing economy that we have? In spite of all the things that are going on, we live in amazing times. And if you don't believe me, just look at what we've done in the last 100 years. Now, does it mean that everything is perfect? Humans have a decided bias to look at the lack and not the abundance that exists. Now, I'm not saying that you can just sit in the corner and chant for abundance. I'm saying what you need to do is learn how to do the numbers, learn how to get smarter, and make more money today, tomorrow, and in the future. And if you do that and you raise your financial IQ, what you'll become is you'll become more successful in everything you do. I am always skeptical and concerned when I try to go out and hire or build a sales team that I have people who have no knowledge of how to do numbers. Because if you can't do the numbers, what you always do is you're always on the back foot trying to sell somebody a proposition, because you know what? Every price at that point is too high and the prospect or customer can knock you back. Well, in truth, the better you know numbers, the stronger you are, the higher your financial IQ, the more likely it is that you'll come out of any crisis and get to the other side and know that you are stronger and better because of it. I want to thank you for joining us here on the Raging Verbalist, number 127. Hopefully we've raised your financial IQ a couple of points, or at least made you aware that it exists. And until next time, I'm John Paul Mendoza, Dr. Street Selling, for myself and the ever lovely Sandra. We're out.